The second types of financing companies is the sales finance companies. These are firms specializing in the purchase from retailers of the installment receivables arising out of retail sales from automobiles, household appliances, industrial equipments, farm equipments, and other durable goods on an installment plan method. An example na kinikater nila is yung mga kagaya ng home credit, cash hello, or yung mga financing companies ng nagpapafinance ng sasakyan. Basta lahat ng durable goods or any durable goods on an installment payment plan method. The last type of financing companies is the commercial finance companies. These are financing companies that are directly lending in a wide variety of businesses, mainly to small or medium size. Short-term loans are granted by these type of finance companies against the security of an assigned accounts receivable, inventory, or equipment. So, when you say commercial finance companies, these are companies granting short-term loans with collateral or with security like nga yung mga assigned accounts receivable or yung mga equipments and inventories of the company or an individual. Another example of a non-bank financial institutions is the securities dealers and brokers. These are firms that purchases securities and holds them for later sale at a profit. They accept a significant risk in buying the securities with an anticipation of a profit. The security broker acts as a go between the buyer and the seller of the securities, bringing the two groups together to a financial transaction that may take place. In return of the services rendered, the broker may charge a commission for the cost of the market or searching the market for a suitable buyer and seller of the securities. Is the venture capitalist corporations. It is a financial intermediary that pools the resources of its partners and uses the funds to help entrepreneurs start up new businesses. The firm raises mainly its funds from pension funds, insurance companies, and non-profit institutions. A smaller amount of capital is provided by the subsidiaries of large corporations, including the banks and life insurance companies. An investment by a venture capitalist is at high risk. So, they attempt to reduce the risk by some approaches like first, close monitoring of the activities of the borrower. Second, requiring equity share in new business. Then last, requiring membership in the management of new business. Next is the non-stock savings and loans associations. It is a non-stock and non-profit corporations engaged in accumulating savings of its members and using such accumulations for loans to its members to service the needs of the household, providing long-term finance for home building and development and personal finance. An example is the APSLA or the Armed Forces and Police Savings and Loans Associations, which serves the AFP, PNP, and the BJMP. It offers deposits and loan products based in Quezon City, and it operates 20 branches among cities throughout the Philippines. Non-stock savings and loans associations must be organized or formed by at least 5, but not more than 15 members of a well-defined group prior to transacting any businesses. It shall first secure a license from the Monetary Board and register with the Securities and Exchange Commission. It shall confine with its membership to a well-defined group and shall not transact any businesses to the general public. Before that, let us first understand what is well-defined group. The term well-defined group shall be defined by the Monetary Board and consists but not limited to the following. First, employees and officers and directors of the company, including member retirees, government employees belonging to the department or the branch office, including the member retirees, and the last one is the immediate members of the families up to the second degree of consanguinity or affinity, or those falling under items 1 and number 2. Next one is a very familiar example, the phone shops. It is a person or entity engaged in the business of lending money or personal property delivered as security for loans. It may be organized as a single proprietorship, partnership, or a corporation. In case of a single proprietorship, it must first register and secure a license from the Bureau of Commerce. And in case of partnership or a corporation, it must be registered and secure a license with the Securities and Exchange Commission. And before commencing any businesses, it must secure or register first a license from the city or municipality where the office of the business is located. Another one is the lending investors. It is a non-bank financial intermediary that engage in granting loans to the public. It is not allowed to first engage in pawnbroking activities. So, in granting loans, it cannot receive a goods as a pledge. The second one is it cannot perform an activities like discounting or factoring commercial papers or accounts receivables and evidences of indebtedness. It cannot also perform funds or portfolio management, and last, it cannot borrow funds from tenders in excess of 19 persons. A lending investor may be organized as a single proprietorship, a partnership, or a corporation. If a single proprietorship is considered, it must be owned by a Filipino citizen and must be registered with the Department of Trade and Industry. If a lending investor will be registered as a partnership, it must be done in accordance with the provision of the New Civil Code of the Philippines, and at least 60% of the total contribution of the partners must be from a Filipino citizen. A lending corporation must comply with the Corporation Code of the Philippines, and at least 60% of the total number of the capital stock must be owned by a Filipino citizen and must be registered at the Securities and Exchange Commission.